Hello and welcome back to another video. I'm your favorite wolf from the channel Wolf of Future Street. Uh, I'm making this video as a bit of an analysis of how I see the next few days and the coming week or the new year kind of opening up from a futures perspective. We are all funded traders or are aspiring funded traders, and we all aspire to either pass evaluations or make a lot of money on our funded accounts. And I hope that this video will actually give you some sort of a guideline in terms of which markets to trade to either pass your evals or make money in your funded accounts. Right. So what I have here is the four major indices uh, on a 1-day chart or a daily chart. So I've got the S&P futures on the top left. I've got Nasdaq, so S&P right here, ES, Nasdaq, RTY right here, or Russell 2000, and the YM or the Dow Jones index. And as I said, I'm only looking at the daily chart for all of these four indices, and I have my favorite moving averages and my custom personal uh, indicator called the RDX Magic Waves. So I've got the 200 EMA, which is right there, and then the 40, which is right there, which is what I was pointing to earlier. So that's the 40. This is the 200, and it's the same for every chart that you see. And then I've got the magic wave indicators across all of those four indices with the two waves, which are these two waves here, and the magic line, which is this line right there. All right. So now that I covered off what I have on my chart, let me give you a glimpse of what I want to discuss. So the point is, it's all about selecting your weapons to shoot, right? And to shoot and make money or pass evals. So which weapons will you trade next week or this coming week, basically? Uh, so I'm kind of trying to analyze that first. So what are the basis for my analysis? So here is what I actually have been looking at for a while, and I'll explain this. So you see that all of my four indices are actually marked with three horizontal lines. So what are those? And those are again pretty important for us to understand what would I want to trade. So off we go. We know that we had this big candle right here that is very common across all of the four indices. And that big candle happened to be the candle that was created after the FOMC meeting, which happened many days back. And that candle created a bit of a range across all of those four uh, charts that you see here. And the first line is the top of the line or top of that candle, and this second line is the bottom of that candle, and the third line is the day after or a couple of days back, a couple of days later after the announcement, when it made a new low, after which we had a bit of a retracement, and now we are kind of trying to do the continuation and may just touch these lines or even go down, right? So that's what those lines actually entail. So those three lines are important for me. Why? Let me explain that again. Let me explain that in my further analysis. So what you will see here is, although we had a bit of a retracement back up, but we could never ever go to the top of the candle, the candle that basically was the big range following the FOMC announcement. And you can see that across the board. So on NQ, we tried to go towards the high, but we failed. And we are now basically sitting back on that, almost on that candle low. On NQ, same story. We couldn't take touch the high, and we are now kind of actually even breaking down below that candle low. On RTY, same story. We could not even cover 50% of that candle range, and we are sitting down. we actually went down the furthest on RTY, and the same story on YM. We tried to retrace towards that high and we couldn't, and we are now sitting on that candle low, right? So what does this actually mean? Interpretation is fairly simple, no brainer, that all these charts are looking bearish, and there is high potential, high probability that they will either touch the low, the third line, which is here, here, right, here, and here, and then if the bullish, or sorry, the bearish momentum continues, that we might actually start breaking down that bit of a barrier. So what does this again mean? That it looks like we are very bearish, or are certainly looking bearish. Confirmation of that bearishness will happen either when we make new lows or when we break the previous low. So which means that I want to be bearish, but I will be super bearish, or that bearishness will be confirmed on NQ, for example, when this 21,000 level will break. We might have a kind of a pullback, retest this zone, and then fail. Very likely. Same thing on ES. We might come down, break, retest, and then fail. And on YM as well, the same story, except for the fact that RTY looks even more weaker. So of the four charts that I have here, RTY looks the weakest number one. YM looks the weakest, number two. NQ looks weakest, number three. And ES is weakest, number three as well, actually, because NQ and ES are almost alike in terms of where they are. Now, I would actually give weakest number three award to ES more than NQ. Why? Because if I now bring my indicator, or the RDX Magic Waves indicator, into the picture, you will see that again, RTY very weak, and it's actually almost even sitting very close to the 200 EMA on my chart. YM and the indicator is looking very weak, right? And then when I said why would I actually give number three price of the weakest to ES, is because if you now look at my indicator, it's looking red. There are shades of red there, and obviously it's clear. But NQ is not the weakest yet, or not number three. It's probably it's weak, but not yet quite there, right? So I hope I made myself clear. But it also means that whilst RTY is the weakest, NQ can do a lot of catch up, and it actually can do a lot of damage, because there is a whole lot of travel left on NQ. If NQ was to basically join the trend with RTY, YM, and ES. So yeah, there is a bit of travel left in NQ. So again, kind of just to join all the dots, or connect all the dots, if I was to actually trade and try and pass some evals next week, or this coming new year, my first bet would be to squeeze some of this small juice that is left in RTY for it to travel from wherever it is right now to the 200 EMA. Number one, that's an opportunity which is very, very, very likely. Same thing on YM, although YM basically still has a bit of a distance left, but not as much as NQ and ES. And I'll probably zoom out of ES as well to show you what I mean. So there is, if YM continues to basically break, if YM breaks the third line on the levels that I've drawn, then YM would be the next quickest to go towards the 200, and then ES and NQ. So if you are looking for, if you are a short kind of a guy, just like me, then you'll be looking at these mouth-watering propositions in RTY and YM as a first cut. And then as soon as you see weakness across NQ and ES, or more weakness than what it is showing right now, then this gap fill between the levels and the 200 EMA will be a very good opportunity. So yeah, I thought I'll just share this analysis quickly to all of you in terms of how I am placed in terms of my mindset and where do I see opportunities and how do I see them shaping up. Hope you like the video. Please continue to watch them and like them and share your comments where you want me to emphasize a bit more on my analysis and how I'm reading the charts. And till the next video, stay safe, stay green.